Okay, so we're speaking to requirement 2, and we said the requirement was very pepperish, and having looked at the requirement, we're asked to do a due diligence. So after the due diligence, we still need to look at the trend analysis of BBNL. So in speaking to the step-by-step trend, is the same thing we do. So for the May 2025 diet, in case trend analysis comes, we need to look at the change just as it is on the screen. The tutorial is here just for you to learn, to practice, not necessarily because we will see this kind of question, very pepperish question again. It may be hard. He will not test something like this, but then let's use it for our learning. Let our learning curve increase with the aim to pass the case study paper. So I used 2013 and 2012 figures to provide a prototype. And if you look at the results, you will see that revenue change between 2013 and 2014 in value and in percentage was what we have here. So we have 4.1 million and 5.2%, which is depicted here on the solution. So for the cost of sales, you see the tutorial went like that, 4.4 million and 12.0%. So let's use that, and this is good. And we took it down to the profit after tax. And if you can see on the screen, profit after tax is negative 37, and the percentage is negative 5.3, which is depicted here. So just follow through this tutorial, and the essence is for you to practice. Yes, practice, and you do that for the 5 years, expectedly, according to the examiner's thoughts. Then for the statement of financial position, we did for 2012, 2013. You can see the change. So for the statement of financial position, you see property, plant and equipment move from 15M, it dropped to 13.5. And the change is about 1.5M, which is 10%. So the percentage in amount is 1.5M, and in percentage is 10%. So you see the tutorial here, negative 10% from property, plant and equipment down to total assets, up to equity, retained earnings and total equity, down up to total equities and liabilities, just as it is in the appendix. So you see total equity and liabilities 25M reduced by 24.9, and it has 0.1%, and that's the amount in percentage. So this is the result, and you can use this base to practice for 2014, 2015, 2016 computations. So I'm sure he will not present this kind of scenario, tough scenario in future again, but please practice with it. You never can tell what the unseen will provide in the main exams for May 2025. Okay, so having done trend analysis, we're also supposed to do common size again for this same acquisition target, which is BBNL. We need to do common size just like we did. So in doing common size, you need to convert the base revenue to 100%. So for this company, you will see that from the screen, you see the revenue was about 78.4 million in 2012. So you need to convert that revenue to a base of 100. So in converting it, you just see 78.4 million divided by 78.4 million times 100. It gives us 100. So I give us a table of the conversion and the formula. So you just take that amount and turn it to 100%. Then for the cost of sales, you divide it by the revenue and turn it to 100%. So expressing it as a percentage of 100% will now give us the percentage in common size terms. So for the revenue that is 100%, the cost of sales is 46%. So this is the table and the formula for conversion of the actual figures to the common size figures. And I did for 2012 to help us understand how it goes. Then for the step-by-step tutorial for the statement of financial position, you see that I provided the base, which is the total asset amount or the value of 1.3 billion, and that is about 100% for it. So you can see the conversion from property, plant and equipment and down to the total assets. I have it as 100%. Then you express the conversion values of each asset component figure to the percentage of that common size. Then we do that the same for equity and liabilities. So the balancing figure for that total asset is the same for total equity and liability, and we have it as 100% also. So do that to express the formula to have that common size analysis, to be able to speak to it graphically. And that's why we can use it to practice. So all the essence of this is to practice, to be able to catch these concepts and be able to apply them under exam condition, if that is what the requirements ask us to do. So take note of that. Then for the ratio analysis, I computed in this is the solution, the appendix, but then the ratio analysis, he did not compute the other staff performance ratios for staff. So for BBNL, there was no information on the performance of staff. That is why that ratio was not calculated. So there was no performance of staff like it was for TDNL. So he only calculated ratio analysis, liquidity, activity, then solvency. That was what was calculated. So look at the tutorial here. I provided a table and I showed the profitability, the liquidity, and the activity, then the solvency that was used. And you can see the formula, you can see the workings, and actually the result for 2012 only. So use this also to practice in this last dying minute, because I know he will bring ratio in that May 2025. The ratio may not be complex. It may have to do with something industry average, but you have to compute the ratios for deep run for maybe 2 years, 2013, 2014, or 2023, 2024, because the numerical information in that pre-scene showed that they spoke of Nigerian economy in 2023. So maybe we bring 3-year financial statements, 2023, 2024, 2025 for this diet, and say you should compute the ratio, or you will say 2023, 2024, depending on what he brings. Please calculate ratio analysis. And that is why we are doing these debrief sessions, so that you can practice with this ratio analysis, get the figures, and know how to write with it. That's essentially why we are going back. Somebody asked me that, so let's just face May 2025 now, leave these mock exams. I say no. We have to look at the solution of the mock exams, because it will resonate with us in attending or attempting May 2025. So I insisted, I said, no, you can't just focus on May 2025 and you don't have the nuggets from these mocks. These mocks will propel you to be able to understand how to attend. Okay, like Aisha said now, she said there is problem. If we didn't do this debrief now, she'll just assume I'm okay, let's just go to the May 2025 exams. Now you know there is problem in few days to the exam, so you need to address this problem. That is the essence of the debrief session. So please go back to the ratios, look at the computations, press the calculator by themselves, read the report, and that's what will help us ace the case study paper. Like I used to tell people, I scored 78, but of course, to God be the glory. We must give glory to God first. But the efforts, I know what I went through. I wrote May 2019. Now, the case study started November 2014. I can tell you that I practiced 2014 to November 2018. All the diets, there were 8 diets. I practiced all of them. Under time conditions, I provide the tuition I was using was Platinum Gold. They were sending us the reports, send us the questions to be practicing Platinum Gold in Lagos. Very good tuition. I paid for that tuition, and that helped me ace it at first attempt. And that's part of why I'm providing these free lectures, these free videos to help you too, the way they helped me. So you need to practice. It's the practice and these sessions that will help you grasp all the nuggets. Their videos that time were encrypted to my laptop, so they were not on YouTube. I decided to make my own on YouTube so that people can access it, because case study could be challenging. I had a friend that wrote it over 5 to 6 times. So SFM case study can be a problem in the professionals. So please practice. That's essentially what I'm saying. Just practice with these things and it will help you navigate it very seamlessly. So I put key notes for you on the formulas and how you are to apply them. So these tutorials, I took my time to prepare it for you to learn, and also in your practice sessions. Okay, so the deadliest part now is this part I'm about to show you. This is the deadliest part of the second area, and the examiner likes this prepperish part. In some of the diets, you see him doing this. And this is a decoy to waste your time because it's time consuming. Now, in looking at how to prepare the computations for the acquisition of this company, you see that from the financial statements, you need to determine the average net assets per share. We also need to calculate the 5 years average profit by looking at the annual maintainable profit and do appraisal investments in the target company. Then you also do net present value by looking at the cash flows. So this is where the problem is. Now, I saw something in the May 2025 diet. There's something on investment. There's something. So it's possible he tests investment appraisal for that company. So there's something on investment reading through the exhibit. We'll speak about it in the preceding analysis class. So please go through this computation, follow it step by step. You will not submit the report now or submit the computation back to me. What are you doing? You are going through this step-by-step computation so that you'll be able to address in case he comes up with something very pepperish like this for requirement 2. So in case he does it, please, I've done step-by-step tutorial of this table. We may not have time on this call to take them one by one. So the first thing we have to do is, based on this information provided for us, they said the purchase consideration will be done through payment of cash. TDNL is not under any obligation whatsoever to absorb any of the existing directors of BBNL. So the valuation speaks to, from the preliminary discussions with the board of BBNL, the company will accept a valuation of the average of net assets per share first. So we need to compute net asset per share and 5-year profit after tax with a growth of 10% per annum. And the average profit for the last 5 years is to be taken as the annual maintainable profit. So from this information provided for us, we use it to compute. So looking at the step-by-step valuation now, you see that BBNL's total assets are the fair value of the of their company that they want to provide for the acquisition company. So we have our total assets of BBNL as 15 million, which includes PPE, and other assets include 28 million, and everything in the asset base of BBNL is 48 million. So in getting your average net asset is your total asset less your liabilities. And on the financial statements of BBNL, the liabilities is 11.8 million. And looking at the liabilities, we also have corporate income tax, personal income tax, and other taxes of about 9.9 million. So in calculating this, we need to have the total or the average net asset, which speaks to 43 million in assets, less the liabilities and the potential tax liabilities of 21.8 million. And the total shares for the company is about 20,000 shares, if you look at their share capital. So the net assets divided by the shares is what gives us the average net asset per share. So follow through the computation, you see 21.8 million divided by the total asset value will give us 1.09 naira per share is the amount of value placed on BBNL that TDNL can buy.
Sir, I'm sorry to butt in. The liabilities you're taking away from the net asset, is it current liabilities or all the liabilities, current and
Fantastic question. So in computing for acquisition, you cannot take current liability. You can only take current liability out of total asset when you are doing capital employed. So in this net asset share, you must take the total assets minus the total liability. You want to buy the company. So you want to know what do they owe and what do they own. So if what they owe is more than what they own, then the company is not valuable. Then if what they own is more than what they owe, then the company is valuable. So in answering your question, you are taking the total asset less total liabilities divided by the shareholders. And that's the naira value per share you are valuing the company. So the total asset minus the total liabilities in BBNL's case is 21.8 million. And the total shares they own for ordinary shareholders is 20,000 shares. So 21 divided by 20 is 1.09 shares. So you can see BBNL is valuable because they have a positive net asset, average net asset per share. I hope that answers your question, Aisha.
Yes, very well. Thank you.
Okay, fantastic. So he has tested this in one Dudley cement. He used the same method to test. If you've flown down diet, Dudley cement and co. There's one diet, he brought this almost the same pattern. So he likes something like this. So please practice with this format, expecting. If it doesn't come, fine. You have nothing to lose. But it's very bad to go to the hall and you see something like this and you'll be like, I should have practiced. So why didn't I know how to solve this? That would be very bad. So please go through it after this class and understand the navigating how to prepare a target for an acquiring company. So just follow through this solution. So after looking at the average assets, that's the step. So we've determined that BBNL is worth 1 naira 9 kobo per share. So we've calculated that. Now the next step is the 5 years average profit computation. What's the purpose of this? It helps in determining the annual maintainable profit, which reflects the sustainable profit based on historical performance. So if you look at the question, that's the valuation. You can see the valuations here. We've calculated the fair value of BBNL based on 15 million, while other asset liabilities are what their book values. And for the benefits of the acquisition, they said it is estimated that BBNL P&L for the next 5 years will have an additional investment of 15 million in PPE and a recycle plant to recycle used bottles in line with TDNL's business model for environmental response business practice. So it is projected that the acquisition will reduce the cost of TDNL's bottles by 25%. And the cost of bottles for TDNL's cost of sales is currently 20%. So we have a 5% variation. All right. So the second part now, we want to calculate our 5 years annual profit and the average profit for the year. So this profit now, we are speaking to profit for each year based on the financial statements and profit after tax. And that's what we use to compute the average profit. So we take for 2012, which is 14 million, 2013, 9 million, down to 2016, 14.2. We add them together and divide them by 5 years to get the average annual profit. So take note of that. So that is what we did here. And we have 54.4 million divided by 5 years. That 5 years they operated. The average profit they made for each year is 10 million naira. That means the company had average profit of 10.8 million. So the annual maintainable profit is based on the average profit and is assumed that they grow annually at 10% rate for the next 5 years based on this second criteria. You can see the second criteria here said the net asset per share and 5 years profit after tax with a growth rate of 10% per annum. So the assumption is that they will grow by 10% per annum. So taking this 10.8 million, we now want to grow for 5 years. So you now increase it and make it incremental by 10% every year. So 10.8 times 10% for year 2 will be 11.9, year 3, 13.1, year 4, 14.4, and year 5, 15.9. So after 5 years, we've grown assumably by 10%, and our bottom line is now 15.9%, 15.9 million. So the total profit for those full years, everything, if you calculate it from year 1, the starting point, to year 5, is about 66.423 million, assumably. So that's where you see this table, and we have 66.423 million. Now it's very important to remove contingent liabilities. We are removing contingent liabilities because they are liabilities that are estimated for. Since this is your estimated growth rate, in case something happened, you are also estimating for contingent liabilities. Very important. So take note of that contingent liability and make adequate provision for it. So in making adequate provision for the contingent liabilities, we need to provide the amount for that contingent liabilities at 9.95 million. And that contingent liabilities was provided in the financial statements. If you look at BBNL's financial statement, you see contingent liabilities there. So you take that amount to less it. So the contingent liabilities is 9.9 million, which is the total profit minus 9.95 million contingent liabilities, and you divide it to have the price per share based on the profit, which is 2 naira 82 kobo. So that was the result you can see here, which is 2.29 kobo. So TDNL should offer 1 naira 09 kobo to 2 naira 82 kobo per share. That's what they should offer. So minimum 1 naira 09 kobo to buy BBNL. And maximum they should offer, you are advising, based on the annual maintainable profit, is 2 naira 82 kobo, considering these factors and computations. So it may sound technical and tricky, but just go back and follow through the computations based on these tutorials I've provided, and just keep yourself abreast and ready in case. Yes, in case. Okay, so having looked at that, let's now look at the appraisal of the investment in BBNL so that we can see if it's profitable based on the net present value model we want to use to compute. So we'll first get the cash flow savings, which you can see here, the cash flow savings. And the essence is to get from the acquisition by reducing the cost of the bottles as projected for BBNL's existing plant machinery. So in computing this, we need to get the annual savings from reduced cost of bottles. So if you look at this question or this requirement, he said it is projected that the acquisition will reduce the cost of TDNS bottles by 25%, and the cost of the bottles in TDNS cost of sales currently is 20%. So in our computation now, we'll first do for 20%, we have the cost of sales, which is for 5 years. Everything is here. And we have for 25%, everything we provided for the 5 years is here. Then how much are we saving? So the savings is between the 20% and the 25%, and the difference is what we are saving. So you see the total savings is about 185 million based on that cost of sales. So if you look at the computation here, the step-by-step tutorial, I've provided it. So for the 20%, 114 for 2012, then for savings, 25% is 28 million. So I provided the step-by-step computation. Just use your calculators and see it. So, and follow through. Then for the total savings over the years, for 5 years, and the annual savings will culminate in 36.423 million. And that's what will be saved annually if that percentage reduced to 20%. So follow through the computation and just understand it under very calm condition. Don't be tensed. I know now you are saying, this is hard. But then just calm down, compute it. They are all the same SFM things you've done. You've done them in SFM, you've done them in performance management, so they can be solved. You can be approachable. So just calm down, don't get tensed, and calculate it. So to get the annual growth rate, the annual growth rate now speaks to the cash flow over the years, over 5 years, applying the growth rate of 12% to the average savings, which is what the examiner said here. He said the savings of the cost per bottle should be based on the average cost of the bottles in the last 5 years, with a growth rate of 12% per annum in the next 5 years, which is estimated life of BBNL's plant. So this is very important we understand and apply graphically. So in doing that, let's look at the growth rate. We project this as 36.4 million times the annual growth rate of 12%. And we have that first, second, third year as its incremental, and they have the last year as 64.19 million, which you can see here as the amount that has grown over the 5-year period. So now we have this amount as our cash flow because each year we said the growth rate of the investment is moving by 12% upwards. So for each year, we use that as our cash flow because we need it to compute our NPV. So now the purchase consideration based on the question here is in cash. You can see they said purchase consideration is in cash. So now the NPV will help us to determine the acquisition, whether it's positive or negative. So in calculating our NPV, we'll take the purchase consideration, which is the cash flow of 21.85. And in this purchase consideration, we need to also add the purchase of the PPE, which is 15 million for BBNL. Then we'll take this annual growth rate savings amount one by one to add as our cash flows for the year. Then the discounted cash flow amount, this is how we discounted it for each year based on the 15% provided for us as discounted factor. And having done that, we multiply the discounted factor by the cash flow to determine our investment. And if you follow through the tutorials, you will see that from this table, we have a positive net present value of about 997.4 million. So if the purchase of the target is about 2.82 kobo, then the NPV will be about 97.4 million. And that is a positive NPV, which will culminate in a good investment. It means that the acquisition will add value to TDNL's shareholders. So every of the computation we are doing here is to determine whether the acquisition is positive or it will add value or not add value. So follow through the computations and navigate it one by one, and just use it to practice in case you see something like that. You don't want surprises on the day of the exam, so please, I encourage you to please do the practice it, follow it. And that's why I took my time to provide those tutorials, because with this table alone in the appendix, you may not be able to navigate through. You may have issues with which figures are these, where are these figures from? And that's why you can see my tutorials at the end of this page, one by one, showing and stating what and how the figures were generated and the computations step by step, how to follow them. Some of us have passed SFM. I know we've passed performance management. So this shouldn't be an issue. It shouldn't be an issue for you. So if you've passed SFM, you don't have a problem with this. And even if you are writing SFM, you should still be able to navigate it because you've passed performance management in school. All right. So if we don't have any questions, that is the Pepperish appendix. That's why I call it Pepperish. And I wonder how he expects you to do this in 1 hour, both requirement 1 and 2. Yeah, so I don't think he will try this again anyway. We won't try this kind of Pepperish diet. So it's for our learning, I believe. All right, so having spoken to the appendix, let's now go and get our marks, because everything I've spoken to now is about 4 marks. You just did. Everything is 4 marks. So if you don't write, you will not pass the case study. That's what it means. So let's go and speak to the numbers. So having spoken to requirement 1 and we've looked at the discussion, please start requirement 2 on another page. Just like it is in AAA, ATAX, SFM, and corporate reporting. Every question, you have 7 questions. Don't start each question after another question. Maybe you finish question 1. Under question 1, you just leave 2 lines and go to question 2. No, you're going to shoot yourself in the leg. You're going to make it hard to assess you, to read your script. So every question should be started on a new page. Of course, there's no mark for it, but it makes your work neat. It makes the examiner have a positive mindset about you. So it's the same with the case study. Now, after you see, I'm done with requirement 1 now, because I just used 2 lines. This is where requirement 1 ends on the screen. And I'll say requirement 2 under this. No, you're not being neat. So you can see I left it and I went down and started requirement 2. That is the right thing to do. So please start requirement 2 on a fresh page. Just like it is in other papers. Start every question on a fresh page. no matter how much space you have. So like an example now, you can see the last thoughts, my last thoughts on requirement 1. Please go ahead and start requirement 2 on a fresh page. Please take note of these nitty-gritties to help you ace this paper very, very practically. All right, so requirement 2 speaks to financial due diligence of BBNL to determine its future financial performance and whether its acquisition will result in increase in TDNL's shareholder value. So state the requirement in summary. You mustn't state everything or write everything verbatim. Just state it in summary. Never should you write requirement 2 as a header. Never should you write financial data analysis. Never should you do that. You're going to be marked down. State the requirement in summary, verbatim. In summary, verbatim. Okay, so looking at the first header, we're looking at analysis of the acquisition. Now, I didn't say business overview or general overview. So the header, I'm trying to say that, okay, they want to acquire BBNL. So any header that resonates with you, just make sure it's appropriate. Headers and subheaders. That's what the examiner said in his report. So in form of business overview, we want to analyze data and information. We just said analysis of acquisition as a header. So you mustn't cram my own headers. Use the headers that apply to you in the examiner, in the exam condition or based on the requirement. Very important. So you can see I said analysis of acquisition. And the first point I said was BBNL shows steady revenue growth between 78.4 million in 2012 to 101 million in 2016. And I said there were a lot of movements looking at their assets, just speaking to their financial statements. And I said, in summary, that everything rules indicate high operating obligations and potential tax exposures. So you are generally speaking to data and information in this first header. Then number 2, I said BBNL consistently generated profits over the years. Notably, the company is facing unresolved tax issues and the potential issue of 8.5 to FIRS and projected PIT of about 1.4 in 20. So I just spoke to the data and I said, aside from this tax issue, the company has no contingent liabilities. Simple. Then the Tostol, I said Tostol Drinks intends to acquire BBNL as part of his acquisition or strategic move. So as your audit firm we are performing due diligence, the focus is to engage the financial health, evaluate the financial health of BBNL and recommend an appropriate. So just generally speaking to data and information to pick 4 marks. And I also said TDNL's board strategic decision to acquire BBNL as part of his growth plan and forecast. And this helps the board with valuation models to synergize and explore the benefits of those synergies. So if you speak to 4 things generally from the exhibits, you have 4 marks and it resonates with you. So I give you 5 discussions. Just read through what could feature under discussions around data and information. Then we now want to use professional tools to speak. So we are saying analysis of the target or the targeted acquisition, and we're looking at the ratios we calculated for BBNL. So we said the net assets, after we subtracted total liabilities and total asset, we saw that in 2015, this was the amount and the figure matches the equal total equity. We said reflecting retained earnings growth and the stability in liabilities, and we quoted Appendix 2 where this was calculated. So we have a lot of calculations in Appendix 2 looking at ratio analysis, trend, common size, and all that. But you need to focus on the second aspect where the acquisition, the analysis of the acquisition using the net assets, the average maintainable profit, and any of those figures you calculated that culminated in the net present value should be discussed. So the second point, I spoke to the 5 years maintainable earnings and how the amounts are estimated for the 5 years, and you quote the appendix, reference the appendix. And for the C aspect, I said the acquisition of TDNL was preparing an estimated annual cash flow of 15 million. I also said this figure represents the value of BBNL to TDNL for the acquisition, and that is the third point. Then the fourth point, I said the treatment of the unresolved tax issues and how they impact the acquiring company is what was discussed in the D aspect. So once you talk about four calculations you performed for BBNL, ranging from anywhere. Why I avoided the common size analysis and the ratio analysis is because I've already used that to discuss TDNL, but I've not discussed the other net present value and the other computations. So I used it to pick 4 marks here. Very key. So don't talk about more than 4 so that you don't waste your time and address other areas. Then in displaying analytical skills, I now brought in all the ratios that I used to speak to the target performance or speaks to BBNL's performance. So I said using the ratio analysis, I talked about gross profit, net profit margin, the activity ratios, the short-term, the long-term solvency ratios, and I spoke them in 1 point all in this place. It may be too much to talk about, but then just read through, and you may not be under exam, you may not be able to provide this kind of write-up under exam condition, but please write to some extent to capture and be mark conscious. I also spoke to the B part, which is trend analysis that we've computed in the ratios, and I spoke to the trend, looking at the performance between 2012 and 2016, and down I spoke to how it demonstrates signs of financial recovery and expansion after earlier volatility. And I also discussed the common size in summary here. So read through, and I concluded that especially the tax obligations grew modestly, suggesting an expanding but consciously leveraged position. So 3 points. Then finally, the NPV, talking about the main thing, and the NPVs culminated in 97.4 million, indicating that the investment is financially worthwhile. And that's the essence of those whole calculations. All that complex, long calculation is to determine whether it's positive or negative so that you can make your decision. So please reference your appendix, and picking 4 points under this analytical header. We are done with that. Then the fourth header, speaking to challenges and consideration. The header we're speaking to, sub-header now, is the state of BBNL's manufacturing plant. And we are saying, are they aged or poorly maintained equipment, which could lead to high maintenance cost? So that could be a challenge. Another challenge we spoke to is integration of BBNL staff into TDNL's culture. So we are looking at the successful integration of BBNL's workforce into TDNL's corporate culture requires careful planning. And we're saying aligning their values, their expectations, their standards could be a challenge, but they should also consider it. Then trade union issues. Speaking to a company that wants to be acquired, TDNL should assess collective bargaining where trade unions and labor unions come up with issues, uproars against how they treat staff. So that could be a challenge. Then the fourth point, we said raising funds to pay BBNL shareholders could also be a challenge, whether equity or debt financing or the mix of both is also what they should consider. And the fifth point that we said are non-financial factors like brand reputation, environmental compliance, community relations, and we look at these as elements that can significantly impact the long-term success and public perceptions of the acquisition. So let's look at this and also critically analyze the ethical issues. We spoke to ethical issues, which is very important. This one now is a mandatory header. The other 3 headers we did, they are voluntary headers. But this one is mandatory, very, very mandatory. You must talk about ethical issues. So one of the ethical issues identified in requirement 2 is that we don't know whether the financial statements of BBNL is audited. We need to verify that, and we are skeptical about the audit of that financial statements that was given to us. So that's part of our professional skepticism we are displaying. And please, by no means should you merge requirement 1 ethical issues and requirement 2 together. Please, they are separate. Don't make that mistake. I mark scripts and you see ethical issues for requirement 1 and 2. No. They are separate requirements. So deal with ethical issues and the conclusions and recommendations for each requirement separately. Don't let the examiner mark you down. All right, so for the B aspect, I haven't spoken about the audit status of the financial statement. We are looking at the correctness of the estimable or estimated tax payable in the 2 tax audits. they are susceptible to any errors of income recognition or deduction. So we are saying that hope it's correctly applied. We are skeptical about the computations and the correctness. So bring it to the fore. Then also another critical issue we are looking at is the maintenance culture of BBNL's plant. It appears to prioritize proactive and regular upkeep to ensure optimal performance and minimize downtime. So we explained that further investigation will need to confirm the consistency and effectiveness of these practices in real-time operations. Another area of skepticism we are looking at is risk assessment, material evaluations, and context factors that could impact the findings that were in the financial and non-financial data presented to us. So that's the fourth point. So we gave about 5 or 6. So there are many things to talk about. So just read through so that in writing, you know what to write and what not to write under this very, very mandatory header, which is ethical issues. Then finally, the header of risk assessment or evaluation of findings. We spoke to the cost required to finalize the acquisition. The cost could be high, and we said there's a positive risk of gaining economies of scale and market expansion, of course, but there's also the negative risk of underestimating the integration challenges leading to unforeseen costs. And if these costs are poorly managed, the anticipated benefits of the acquisition could be eroded. So in this last header, we are talking about risk management and assessment to really help foster the project's acquisition to be seamless. We also talk about the appraisal method used. So we said other appraisal methods such as this company comparative analysis could be better than NPV we use. So we also need to look at the risk that lies in the ability to highlight market trends, industry benchmark, while there's a negative risk involving too heavily on external data that may not fully account for the unique dynamics of synergies specific to the acquisition. So we're generally speaking to the risk of the appraisal method used. Then the use of the cost of capital. We said the derived weighted average cost of capital could consider the company's debt and equity mix and the industry risk, speaking to the prevalent market rates to ensure it accurately reflects both systematic and specific risks. The likely savings also is another area we looked at, saying that there's a positive risk of achieving substantial operational efficiencies, but a negative risk exists if integration proves more complicated or costly than expected. So we are looking at the pros and cons and merits and demerits, and also risks that could come up. And we are speaking, we are bringing our thoughts in that direction to help management make very informed decisions. And finally, the number 5, if you're giving 4 is fine, but I give you a plethora of them so that you can read through. So we said competitors may react to the acquisition by adjusting their strategies. And we said the positive risk is that the acquisition could provoke industry-wide improvements and innovations, benefiting the overall market. But there are also the negative risk that competitors may use aggressive tactics to undermine the acquiring company's position so that they could reduce their prices of products or services and also target newly acquired market segment, which could negatively affect the acquiring company's margins and market share. So please think widely. You have a lot to talk about and be mark conscious. The essence is to pick your marks, pass with 50 and move on. That's very important. And finally, talk about the conclusion and recommendation, which is very important. So you're concluding on the net asset of BBNL, and you're saying that risk will arise from overall overvaluation of those assets and all these unrecognized liabilities. And the B aspect, we are concluding on range of prices to be offered to the shareholders of BBNL. So we need to be careful to offer too high a price, which could create an overpaying scenario, and also too low a price that might result in rejection or resentment from BBNL shareholders. So we're concluding on that. We also we're concluding on other factors not considered, like potential tax implication, changes in working capital requirements, the impact of the acquisition on our cash flows, not addressing also the unforeseen challenges of post-acquisition and the overall return on investment. These are things we need to consider. Also, other non-financial factors speaks to corporate culture compatibility, employee retention, and long-term goals. So read through. There are a lot of plethora of things to talk about. And finally, number 5, will the acquisition add value to the shareholders, which is the crux of the matter? So we need to be careful about this strategic plan to ensure that the acquisition is a success and value creation is the result and maintenance. Very, very important. So after concluding, you need to recommend. So based on the conclusion, we're recommending that a range of prices should be offered to BBNL and based on specifics. We said it should be between 10% above the current market value, ensuring that it's attractive, and the price should be determined based on detailed financial analysis, and the firm should decide within 30 days. So you can see that our recommendations are specific, measurable, attainable, realistic, and time-bound. So make sure your recommendations are not blurred, especially in this aspect where you are discussing. You don't need to be smart in your executive summary, but in the write-up, please make it smart. If you are telling them what to do, tell them how to do it and what to do with timeline. Very important. In the B aspect, we said accuracy of all estimations used. We said they should ensure that all the financial estimates and the appraisals are accurately conducted, and also, if possible, use external financial experts. And also, it should be completed within 20 days. So we are giving them time and all that. Also, determining whether to proceed with the acquisition, they should make their decision in 30 days based on after they've appraised their data, done risk assessment, synergy potentials. They should do that with a view to ensuring that it meets their strategic objectives and long-term growth prospects. So we have the 4th one saying the cost involved in the acquisition, they should determine it, and all other related costs like legal fees, advisory fees, integration costs, and do that in the next 15 days. And also the acquisition of BBNL should increase value. And we said that the increase of value depends on their market share, operational efficiencies, and long-term profitability. And they should aim to complete this in 90 days to ensure that all risks are mitigated and the integration plan is carefully executed to maximize value creation for shareholders. So having finished requirement 2, you can see that we didn't sign requirement 1 because we are not done. So having talked about requirement 2, you sign out. You are done with the analysis. Please sign out, not your personal name now, the person in the case, because we are wearing the hat of the person in the case. So sign out by saying, yours sincerely, Dave Chukura, junior consultant, business. So some people use the name of the firm. It's okay. Yours sincerely, Maja, whatever, I'm cool. You can put the name of the firm here, just like it is some people do in the cover page. So having spoken to the requirement 2, let's go and summarize our executive summary. The executive summary is just a picture of what we just discussed. And the header for executive summary number 2, requirement 2, is financial due diligence of BBNL. So in no circumstance you use a requirement 2 findings or financial data analysis findings. Don't do that. All right, so we speak to 2 findings of the requirement 2 we just spoke about, and we conclude and recommend. So the financial due diligence talked about BBNL steady growth from this to this in 2 lines. We also speak to BBNL's consistent generated profit over the years as a major finding, and we said it's modest and it's good. So you do that in 2 lines, no story. Executive summary, there's no story. Then in concluding, we said the net asset value of BBNL should be carefully evaluated. 1 line. The range of prices offered to BBNL should reflect both the current market value. Another line. Other financial factors, non-financial factors, acquisition could add value. We are concluding on that. Maximum is 4, but we gave 5 so that you know you have options when you are reading. Then in our recommendations, we are saying they should offer a range of prices to BBNL between this percentage. They should determine and include all acquisition related costs. Ensure that the financial estimates used in the appraisal are verified for accuracy. That's our recommendation. And number 4, they should make a final decision whether to proceed for the acquisition or not. But based on what we calculated, they should proceed. We are recommending because it will add value to the company. So having done that in summary, you are just recommending based on what you discussed, and you make it very succinct. Don't go more than 2 pages. You can see our executive summary is page 3 and page 4. Very, very succinct and concise. All right, so that will be it for requirement 2. Let's go to the cover page now and see how to write a cover page. So the cover page is the first place. So for an external report, we'll put the name of the audit firm and any address that comes to your mind, or the website. You can follow this format. I noticed this May 2025 is an internal report. It's not external, so you don't need this letter-headed. For internal report, you use memo form. Yes, you use memo format. But for external report, you use letter format. So as we're going to prepare the pre-scene document and what the cover page should look like. So it's going to be a memo format. So for this letter-headed, we are addressing it to the board of directors of Tostol. Then the report should not be on requirement 1 and 2 or financial statement analysis or financial data analysis. No. State the requirements verbatim. It may be in summary form, but state it. You can say I stated an appraisal of the performance of the past 5 years to the shareholders of TDNL using EVA approach, and a report on the financial due diligence of BBNL to determine its future financial performance and whether its acquisition will result in increase in TDNL's shareholder value. So state it, don't write otherwise. Then prepared by, some people use Dauda Efurum Bala & Co. is fine, but I like to use the person in the case. So please use the name that resonates with you. So if it's the head, the audit firm's name is good, but don't forget the exam. You are the one preparing the report in the exam. Even if you are sending it to somebody to supervise, your supervisor, you are still the one writing the report. So it's prepared by you. And don't forget, external reports must have disclaimers. Very important. Internal reports don't need disclaimers, but external report needs disclaimer. You'll be marked down if you don't write a disclaimer for external report. Very important. So the disclaimer just speaks to the fact that this report is only for the board of directors of TDNL and no other person. Anybody that uses it is on his own. That's what the disclaimer speaks to. So after that, you have your executive summary. Then very importantly, you need to get 2 marks from this introduction page. And this introduction page will now tell you almost the same thing you did in the executive summary. It's just that you are stating the challenge and your reservations you faced during the work. Then this report outlines is stating the pages. In case you overwrite or underwrite, this is where you resolve that issue, and that's where the examiner knows your paging in answering Lola's question or Justina's question that time. So after the introduction page, this is just 2 marks, so it's not much. This introduction page is 2 marks. Then this next background and scope is also 2 marks. So 4 marks for these 2 pages. It's not really much, but then you don't know when 4 marks you need it to scale through. So some people tell you they will not do it. Do it. This background is directly from the exhibits. You can just copy the history of the company. Not everything, you can't write everything, just a short history to tell us the background of what the company is all about. Then what are the scope and limitations you faced? Like this issue, we had a scope, a restricted scope for 5 years, 2012 to 2016. And we also have limitations ranging around no cash flow statements, no financial disclosures, and other comprehensive income from Forex, no statement of changes in equity. So these are just general things for you to write to pick 2 marks. So if you structure your report body and the headlines like this, it will help you to ace. So the examiner's report, I just brought it at the first place so that when you are reading, this one is not required. So in your report outline, actually, you have, what do they call it? You have report outline. Your cover page is page 1. Then down to your appendices. You can see everything here is about 32 pages. That's aside the tutorial. The tutorial is long. That's what makes the documents to be about 57 pages. But originally the report and everything is about 32 pages. So under exam conditions, you can write 20 to 25 pages. This one is computer based. So depending on your font, the font and the size of the letters you write, you can write 25 pages. So the more you write and the value of what you write, the content, the richness of the content would really get you to ace the case study paper. Okay, so ladies, I don't think there's a gentleman on the call. Let me say ladies, this will bring the end. This has come to we have concluded the 2017 November 2017 diet, and I chose this diet deliberately because I know it's a pepperish diet and it will help us to practice all those terrible appendices and expect the worst from the examiner. That was the essence. So I'll take questions, contributions, observations right now so that we can close. It's already 10:25 so that we can rest. Any question, contribution, observation from the requirement 2 we just did?